Hi, and welcome to the Stockscores Market Minutes for October 19th, 2015. Before we get into this week's Market Minutes, I want to talk about the Stockscores Virtual Trading Club. Now, in the past, I used to travel around speaking live at trading clubs in different cities, and that eventually became impractical because of a lack of time. So what I'm going to do now is a virtual trading club. We'll try it this month, see if it's popular with people. Essentially, it's free to attend. It's a webcast or webinar. You log on, it's live, and I will discuss things like trading concepts, the market conditions, where I see opportunities in the market, things I think you should avoid, some of my analysis methods, tools, just general trading stuff related to the Stockscores approach to the market. We'll talk day, swing, and position trading, and it's all free. So if you want to participate, it runs Tuesday, October 21st. If you're in the Pacific time zone, 6 p.m., 9 p.m. Eastern, 10 Mountain. You guys can figure out where you fit in the time zone. You can register by clicking on the link. There's a webinar link on the Stockscores.com homepage. So you have to register in advance. It's only our webinar software only facilitates 500 people. So if for some reason you register and then you can't log in because there's just too many people, I will record it. It's not as useful as a recorded one because you can't ask questions and it won't be live, but if there's no other way, then that's what you'll have to do. So I hope that we'll see lots of you out there, or at least virtually out there for the live webinar. All right, let's talk about this week's topic, which is anticipating the pattern. You probably know by now that I'm a big chart pattern advocate. I think that chart patterns are extremely predictive. It's my primary method for making money in the market is looking at these patterns. But as the market gets more and more competitive, you have to actually start to anticipate what the pattern that building is. And that can give you your entry and exit points. Patterns will form areas of resistance and support and therefore turning points in price direction. So for example, if you're looking at an ascending triangle pattern, or what seems to be an ascending triangle pattern, let's say we're kind of going up and then we start to come down, we come like this, well, that looks to me like we could top out at the resistance and we're building optimism like this. So, I might buy it here with the expectation that I'm going to sell it up here when it gets to the top of the pattern. Then it'll turn down and I'll think, well, rather than wait for a breakout, maybe I'll buy it at the upward trend line of the pattern, expecting it to bounce there and move up again. Now, this is tricky. It takes some experience because, seeing patterns when they're there is hard enough. To see them when they're still forming is another level of difficulty. And you know what, if, like let's say for example, I'm buying here thinking that I'm hitting the bottom of an upward or an ascending triangle, but it actually breaks down, well then I got to take my loss and then figure out what the pattern is. Maybe it's turned into a different pattern. So a lot of times the market's going in a direction where a certain pattern is building and then something happens and that changes. So you have to always be aware of that and be quick to take your losses if the market proves you wrong. So here, for example, is a cup and handle pattern that was building over the last month or so, and you can see that here's the bottom part. That was our correction, or not the correction. The bigger correction was in August, but this was the pullback in September, and then it rallied all the way back this last week or so and got up to resistance. And we talked about this resistance many times, where you would expect the market to get stuck, and it got stuck once, got stuck twice, but on Friday it actually broke through that. So that tells me then that this pattern is a flag, and that means that we should continue higher from here. That's the pattern that's formed so far. Now, we'll only know with the benefit of hindsight if that's actually what happened, but that's what will probably happen. Now, it sometimes helps us to look at the longer term time frame to see where longer term patterns are building, because it'll help us see the short term ones. So let's do that. When I look at the longer term pattern for the S&P 500, I can see that the downward trend line that has been building for a couple of months was broken this week right there. And that also, given that we've broken through that downward trend line, points to us moving back up towards resistance here, which supports that we saw a flag pattern on the intraday chart. So the basic outcome of this is that I expect the market to move up more next week. Eventually it's going to hit resistance, but we're at, let's say, 204, 203 on the SPY. Upside's 212. That's a decent amount of upside, even though it doesn't seem like a lot in the picture here. It's actually a decent amount of upside. So that's why I'm generally optimistic about the market, but not extremely optimistic, because long term we're still stuck in this sideways trading range, right? So we're stuck in a rectangle pattern, and I expect that when we get up to resistance here, we will get stuck and continue to build that rectangle consolidation until we can maybe finally break out through it. Now, what would prove me wrong is if the market made a falling top. We've talked about that falling top many times. So if the market makes a falling top in the next week or two, let's say we only rise up to, say, 207 and then roll over, well, then we're headed to test that support area there, and that longer term trend line break that we talked about a month ago will come into play again. So you're always having to adjust and react to what the market is doing. All right, Russell 2000 kind of supports that we're going to see some more upside here because the downward trend line on the Russell was broken. This is a daily chart, not a weekly. You can see that in the last week and a half or so, the Russell has broken that downward trend line. That points to higher prices. And the pattern that appears to be building is a head and shoulder bottom. So here's your shoulder, here's your head, and we're maybe making the right shoulder over here. Here's our neckline. And so we could even call this the neckline. That's probably more accurate because it was touched more often. And if we can break out through that, then we'll have made a head and shoulders bottom combined with a break of the downward trend line, and that should put the small caps up into a bigger move up into either here or here or here. Those are all resistance areas. All right, Toronto Stock Exchange. Here is the short-term chart. This is the T.XIU 60-minute chart going back a month. And you can see a flag pattern here. So the trend ran up and away from the trend line. I drew the trend line in green, pulled back for a few days, and it broke that on Friday. This is breaking from a flag, so that points to higher prices. Now, when we look at the longer term time frame, we see a little bit of a conflict because although that intraday chart points to higher prices, the longer term chart shows that we're stuck at the downward trend line. Now, perhaps we will break the downward trend line, because we did pause here for a week. That's what we typically see, rally up to the trend line, get stuck, and then maybe Friday's action points to us ultimately breaking that downward trend line, which would be from a rising bottom. So that's a positive. So it'll be real important on the TSX to watch what happens the first few days next week. Here's the TSX Venture. We've seen some better things happening in mining, better things happening in oil. Largely because the US dollar is getting weaker. Why is the US dollar getting weaker? Because people think maybe interest rates in the US probably won't go up this year. I think the futures market is pricing in only a 30% chance that interest rates will be raised in 2015. You'll see in a moment when I look at the US dollar chart, that's making the US dollar look a little bit negative, which helps commodities, which is why the TSX Venture is getting better. You've got rising bottoms. We've rallied up to resistance. I expect we'll get stuck here. We've already been stuck there for 3 or 4 days. If we can break through that, well, then we'll have a little cup and handle pattern or an ascending triangle pattern, however you want to look at it. Here is the Treasury Bond ETF, TLT, and it's at a critical point because we're at the pointy end of the pattern where volatility is tightened. That means investors are confident, and it's now a question of whether they want to send this into an upward trend or a downward trend. Well, what would cause each? If the U.S. is expected to not raise rates, then we would likely see this move up, which means lower interest rates. When bond prices go up, that means interest rates go down. If we get stuck at resistance here, then we move down, and that means interest rates are going up. So it'll be real important to watch this one next week because it's going to be largely dependent on what the U.S. dollar does, what the general expectation from the market is about the raising of future interest rates by the U.S. Fed. Because the economic numbers haven't been very good, many are thinking that we won't see a raise this year. And here's that U.S. dollar chart that I talked a lot about. It's building a descending triangle so far. Now, up until a few weeks ago, I said this was a pennant that was building, or even a flag pattern that was building, because up until a few weeks ago, we had, let me just get my line drawing tool here, we had rising bottoms kind of like this, but we broke that in the last couple of weeks, so now it's more of a descending triangle. What does descending triangles usually resolve with? A breakdown. And that breakdown would be obviously US dollar weak, which would be helpful for commodities. You can see the sentiment stock scores are steadily declining here, so it's getting to be a more and more negative picture for the US dollar. However, descending triangles are only important when you get the breakdown. Don't anticipate it. I mean, this could just still be that flag pattern and then ultimately break up. Until you get the break, I wouldn't try to be too smart with what the US dollar is going to do. It looks now to be more probable that the US dollar will break down, but it's not yet good enough to build a trading strategy around. Here's gold, downward sloping channel. We're at the top of the channel. That means we should get stuck here, but we may just kind of get quiet at the top of the channel and then ultimately break that. And then for the first time in Lord knows how long, we'll actually have a little bit of a bullish signal on gold. We haven't had one in years. So that's something to keep an eye on. You can see the sentiment stock score is climbing here for gold, the GLD ETF anyway. Been steadily climbing for about 3 months, and we're getting over that critical 60 mark for the GLD on the sentiment stock score. Oil has broken its downward trend line. It was a little tricky to draw this because I could have gone right across these tops, but then I wouldn't have touched this one, so I decided to draw it across as many tops as I could, which is why I did it this way. We've broken the downward trend line from a rising bottom. That points to higher oil prices. Not super high probability yet. I would say 60% chance versus 40% chance down, but still a 60% chance of oil going higher is better than it was 2 months ago when it was probably a 80% chance of going lower. So the trend has started to reverse. That's a good sign for commodity countries like Canada and many of the emerging markets who produce commodities. And again, that's all contributing or all driven by that weakness in the US dollar, which is driven by the expectation that the Fed won't be raising rates this year. That's still a very uncertain picture, so we don't want to get too bullish yet, but things are starting to shape up. And finally, the old fear index. Still a fair bit of volatility in the market. I've been trading mostly volatility in the last little while myself, buying and selling the S&P index ETFs, the leverage ETFs, the VIX, the XIV, all those different ETFs that are really based around market volatility have been very, I'm not going to say easy to trade, but certainly more profitable to trade than normal. And it's starting to quiet down because fear is, not as high as it was just a few weeks ago, but it's still higher than the total complacency that we had at the start of August. So I think this could still be something that goes on here, and we got to keep an eye on the market. I'm still going to be trading volatility in the next little while, but as this starts to go down, we'll be able to start trading stock-specific stories more because the market will be less of a force, and the stocks, their alpha factor, as we go through earnings season here, will be more of a force. All right. So, U.S. stocks, neutral long-term, we're in that rectangle pattern sideways. Bullish short-term, looks like we can still see some gains. Canadian stocks, neutral long-term, right at that downward trend line. This is an important potential turning point for Canadian stocks. Bullish short-term, got a little bit of conflict between those two time frames. Gold, neutral on both time frames. It'll be interesting to see if it can finally break out of that downward sloping channel. Oil, neutral on both time frames. Stocks continue to stage a comeback rally, but with each up day, the risk grows higher as uncertainty is still significant. Oil is trying to stabilize, and gold may break its downward trend. Watch for a breakdown in the US dollar. Look for trading action to slowly improve as we get through October, the uncertainty of October, and we start to take a more stock-specific view to the market as earnings continue to roll up. Well, that has been the Stockscores Market Minutes for October 19th, 2015. Have a great week in the market and trade well.